if you're emotional, this asset class probably isn't for you.
True.
It's extremely volatile, and that's also where you get the get rich quick piece, right? And people forget that. It's hard to stomach watching your portfolio drop 30, 40, 50% in a day, but it's really fun when you watch it go up 100 or 200%. So you have to be able to maintain a really even kill and know that you're invested in this asset class over the long term. These are investments that people should be making here. It shouldn't be, I got to pay my rent this month and I'm kind of, trying to invest this to get a quick flip. I would look at this more as a long-term deal, allocate what you can, that you're not afraid of losing. I look at it as a retirement fund that you're going to need 5 to 10 years from now. And if that's your perspective on it, you're not overly concerned about the daily volatility. You may not even be looking at it. Like, kind of a set and forget mentality is what I think
Yeah.
a lot of people have been successful with. If you look at the stock accounts that are currently the highest value for individuals, it's people that are dead. So they've just sat it there. There was no beneficiaries attached, and it continues up into the right over the long term. The personal emotion is what causes most people to lose money in a market. And you're not ever going to pick the top, and you're not ever going to pick the bottom.
Right.
You might get lucky every once in a while. And there may be people out there on the TA that, oh, that's not me. That's not my game. And for most people, I would say, 99% of traders lose money. There are very few people that actually control markets and move liquidity and have groups of people that can actually move liquidity in, and you're going to get rugged. So the best bet here is just stay steady, believe in the long-term utility of whatever you're investing in, whether it's a company or a digital asset, and kind of set and forget and just think about, 5, 10 years from now, I'll be able to park this somewhere, earn that interest, and then live the life that I want to, no longer having to work that 9 to 5.
Yeah, I think that's a really wise way to look at it, because I think we get emotional and we watch it daily and it's, oh no, it's up, it's down. And people pop in, they pop out, and it's just, they lose the perspective of the big game. Makes a difference. But for the long run, they're just like, you know what, we're just going to wait and see what happens. They're not being emotional, because I think that's where you get wrecked. And I think that, just slow and steady and quit using, it's not a slot machine. It's not Vegas. And if you're using it as Vegas, you're going to lose 100% every time. So
It's the people that hold over the long term, dollar cost average, and the most, irrespective of, whatever investment it is, whether that's stocks or digital assets or even real estate. If you're able to accumulate over the long term and the dollar is depreciating, which we're all aware of at this point, assets are going to continue to grow in value in opposition to that. And you're setting yourself up for success.